I've got my updated XRP price prediction. I will show you what is going on with XRP, also Bitcoin, and I'm also going to talk a little bit about inflation in this video, and then SPY, QQQ, and IWM. I'll give updates on each of those. We'll kick things off with XRP in a big way here. So I've been talking for quite a while now about this bull pennant that we've seen on XRP. There we go. Let's get rid of the MACD here for a moment. There we go. Give us a little bit more room on our charts. And yesterday, actually 2 days ago now, we had that retest of resistance as support. So it was resistance while we were in the consolidation pattern, came back down on Monday, retested as support, found out that it was actual support right in there with that candle. And I said, we should be able to rip from here. So far we have, but look at that high wick. Where in the heck does that come from? Well, it's from this previous high that you have over here, pretty much even with that previous high. So a rejection is to be expected. It necessarily might not be something that actually holds us down for right now. We do want to see that previous high broken. A new higher high is also a bullish thing. Now, mind you, it still is a local high. If you go back and look all the way back, it's not the all-time high. So let's go back to from here. Let me shrink that down for you a little bit because I updated the technicals. Originally, when I talked about this consolidation pattern based off the bull pennant that we have, I had my breakout moments all the way down here to low ball it at 316. It turns out from the breakout that we have, 340 should be that updated price target 1, and we are still on that climb right now. The RSI is looking really good. We have Bitcoin's influence to pay attention to, and I'll get to that in a moment. According to the flagpole that we have, the updated price that I have here is $4.72 from that breakout that we have, and that's up from the 445 that I originally reported as a conservative value, assuming that it took the entire consolidation period to break to the upside, and we did get a breakout a bit earlier than that when you see it over here. So 340 from the consolidation pattern, just from the pennant, and then using the flagpole on that next price target comes out to be 472. If we go to Bitcoin to see what's going on, here's something we definitely want to pay attention to for Bitcoin. So far, we got rejected twice at the 50-day, which is this pink line that's coming up through here. Let me get rid of the technicals for just a moment. Making it back up on top of 50 is going to do a lot to refute the head and shoulders pattern that was forming for us but never confirmed, even though it tried when we look back to January the 13th. The fact that we just peekabooed down below the neckline means that the neckline's not broken, which means we don't have a head and shoulders pattern, but it is close. We have everything there but that breakout moment to the downside for Bitcoin. And so right now we're still in really good shape, still up above the 200-day. For Bitcoin, need to make it on top of the 50-day, which happens to be right around 97.5 as I record this video today on January the 15th. So just about at the middle of January here. Getting on top of that is one thing that's going to help us move more to the upside. Breaking this previous peak is definitely what we want to watch for, and so far we haven't gotten there. That peak happens to be at 102,760 as per Bitstamp, so breaking 103 or greater is going to be excellent for us for seeing that upward momentum. And I apologize, I have a cat that keeps on trying to get up on my lap here. His name's Benjamin. Say hello to him in the comments. So for Bitcoin, that's absolutely what we want to watch. If we fall from here, it's still possible that we have that confirmation of the head and shoulders pattern. If we push back down to the neckline and manage to break it and actually hit our heads off of that former support as resistance, should we be down below it? If we do, that price target comes out to be about 74,000 per BTC, which nearly coincides with an important Fibonacci value of for the 38.2 of about 72,000 and the 200-day that we have for Bitcoin. Here's Benny. He's back again. Oop, I got his leg there. There he is. There, you're YouTube famous, my friend. Now move. All right. He's staying on my lap now at this point in time. So for Bitcoin, that's what we had to look at. Break above the 50-day. Hopefully we get it. We have decent momentum crossing back up above 50 as per the daily RSI. And then, of course, we have the monthly and weekly RSIs still well above 50 themselves. And if we take just a quick look at each of those, there we go, 64. So we're no longer in overbought territory as per the weekly RSI for BTC. And on the monthly, we're at 74. So still overbought, but not necessarily time where we're going to see that drawdown, although it is worthwhile to mention those high wicks that we see could be indications of selling pressure, especially if we can't get back up above that 50-day that I was showing you previously. All right, let's get into the stock market itself. Here's something where we tried. I think that this is the area of support that we have for head and shoulders pattern. So you could argue a neckline at 586, but I thought that 581 would be the more telling part of that. Now, mind you, if it is 586 and we're breaking out and we're about to retest it, watch out for that if we don't break 586, especially if we break 581, because that could send us down to the price target that I have here for you of about $558, which puts us near, once again, the 200-day for SPY. We have CPI coming out today. That can really affect what we have. Bank earnings right now are pretty incredible. So we see a lot of green in the bank space, in the financial sector. And, we'll see if that continues to hold out. We really want to take a look and see what they're forecasting for the rest of the year. And so far, the market seems to approve of what they've seen from those earnings right now. We could have that green day, but we'll see during the regular trading hours when that happens. And then when we move to the Qs from there, we've got to break down below 503.52 if we're going to have a drop. You can see that we got almost there, that we opened down below it and closed up above it, and that was going back to Monday of this week. Yesterday, crossed back above it, still have it as support. This is not a trend line that I'm setting in stone yet, just an idea that I'm kicking around based off of these previous peaks that we have. We have the 50 and the 20 to contend with. I think those are the two biggest things. Getting back on top that 50 is going to be a hugely telling thing for the Qs to see further upside. And when we look at IWM, we have this trend line here that goes back to October of 2023. So over a year ago at this point in time, got to get back on top of that. Keep it as support. Maybe we have it today. And then this trend line coming here off of the previous highs that you could say are trailing down for the trend line for these previous days' prices. Just haven't gotten above it yet. And then we also have 225 coming in as that next Fibonacci level that we have. Getting back up on top of that is also going to be huge. In order to be bullish, I said the 200-day could be where we find that bounce. So far, we're getting that bounce, but now that 50 is the next big test, which is up there. Actually, it should be. The cat just stepped on my keyboard. He got back down on the floor now because that. So the 20 is actually that big test, which coincides with this trend line. On top of that 20, if we don't get rejected at the 20, if we're able to have it as support, then that 50 is what we're contending with. So guys, we have a lot of reasons to still be bullish out there for what we have. We'll watch to see what the CPI gives us. Hopefully it's subdued like we had for the PPI, that it's something that continues to show that inflation is subsiding and that we continue to see a relatively tight labor market that's not further tightening, but just stabilizing, because that's going to be, in my opinion, one of the biggest bullish scenarios that we have, allowing the Fed to keep on easing off those rates and move away from that restrictive policy, especially if inflation starts to move too close towards deflation while that labor market is tight. That would give them some room to do some further cutting, and that could be very bullish for markets, especially the Russell 2000 stocks. Guys, if you want to see more of what I have to offer, see my buys and sells, talk to me and my community members, check out the link for the Patreon down in the description. Click that, head on over to the Discord in that Patreon. That's where you're going to find everything. And then also, guys, if you want to do technical analysis yourself, get access to the bread recipe trading strategy, find the link for Stockmo Academy down in the description. Click that, sign up, and use the code word doctor when you do. It's going to give you a massive discount. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. I'll see you in the next video.